Good afternoon, everybody. It is now Tuesday, March the 1st, and we got to stop meeting like this in terms of discussing these kind of issues. My last video that I did was last week in the wake of the Russian invasion of Ukraine. It was on Friday, and we saw a pretty strong bounce off the lows that we had on Thursday. Friday was an exceptional day in terms of performance in the overall markets. Dow was up 780 points or so. S&P was up 90 points, something like that. And my comments at the time were that I thought that the reason we saw such a strong rally in the wake of all this is because the United States and the Western powers had decided not to kick Russia out of the SWIFT system, which is basically the system that records transactions cross borders for over 11,000 banks around the entire world, 150 plus countries. It's sort of the standard if you're going to be moving money overseas between banks. Well, over the weekend, we did kick Russia out of SWIFT, and I think we're seeing the repercussions of that this week. So why does it matter? Well, you have Russia that, before all this started, was the 11th largest economy. Who knows at the end of 2021 whether they're even going to be in the top 20, because this has been absolutely devastating to them financially. You've got a situation now where the ruble is essentially cratered and totally collapsed. Electronic payment systems are just not happening at all. Russia basically increased their key interest rate from, I think, about 7.5% to basically 20% overnight. You have Russian citizens on the ground that can't buy subway passes because Apple Pay and everything else has been turned off. So why do I think that's a problem for the global economic system? Well, you've got an economy, about a $1.3 trillion economy, selling a commodity around the world, and now you suddenly remove them from the system. So it's not a question of is Russia right or wrong, is Putin a terrible guy? He obviously is. But what does it mean for the rest of the financial system? It means this: you've taken this chunk of money, this chunk of commerce, and you've kicked it out. So what does that do in terms of counterparty risk? What does that do in terms of people that owned Russian debt that now has been massively devalued? I think Russian paper is now trading 20, 30 cents in the dollar. Russian stocks, not a huge part of the world economy, but that market's not trading at all right now. So there's counterparty risk at hand. And to put this into context, it's a big deal. I'm hearing like it's a Lehman Brothers moment. I've read that type of thing. I really don't believe that. I said the same thing last fall when Evergrande, which is the big Chinese property developer, looked like they were going to default. We're not dealing with the same size here. Lehman Brothers was $800 billion back in 2008. So we're talking $1 trillion, $2 trillion, $4 in today's dollars, where total debt held total Russian debt out there across the world is about $300 billion. So it's a massive amount of money, but it's fractional relative to what Lehman Brothers meant to the economy in terms of removing them from the system, now 12, 14 or so years ago. But it definitely still matters. So what I think everyone's doing right now is there's two things they're doing. First, they want to know exactly how this war is going to continue to unfold across the Ukraine. And by the way, I got a little bit of flack when I showed that last video, some people saying, wait a second, we need to punish Russia for this. I agree. However, there's ways to punish Russia without punishing ourselves. So what I would recommend if I was in charge, and of course I'm not, is you absolutely open the spigots in terms of domestic oil production and fossil fuels here in the United States, because that is what is going to drain the lifeblood out of Russia. Instead, now we have created kind of a hole in the financial system now that Russia is officially, at least for now, kind of out of it. The question is, how does all this resolve itself? Well, here's what I think. I think the counterparty risk out there is not nearly as big as a lot of people fear, but everyone's trying to figure that out right now, which is why you saw down markets yesterday, Monday, Dow today down about 600 points as well. The companies that look like they have exposure, U.S. energy producers, really good. We don't do a whole heck of a lot in Russia. Looks like BP is probably the biggest of the foreign oil producers that have some exposure to Russia. In terms of our banks, not too much. I mean, fortunately, again, Russia, not a huge economy. Citicorp apparently has some exposure out there, but again, not the big U.S. banks are not. Just don't have as much exposure. European banks are going to be worth watching. SocGen, some of the other European banks do have some Russian exposure, so it's going to be interesting to see how they trade over the next couple days. So that's one thing. People are now trying to price risk when you've taken a 11th largest economy in the entire world and you've essentially thrown it out of the global financial system. That's some of the uncertainty. Part two of the uncertainty is obviously bombs dropping on the ground and what all of that means. And you know what? I think we've kind of got ourselves in a position here, the way I see it, and it matters for the financial markets, is there's really three potential outcomes. Either Putin wins, that's one, or Putin is either deposed, or he's executed, or he kills himself, or he dies, basically, is the second. Or there's a third thing which no one really seems to be willing to open this door, but what is a way, and again, this isn't pro-Putin or anti-Putin, but what is a way, if you want to end this thing, where you give him an off-ramp where he can lick his wounds and go home? And I don't know necessarily what the answer is, because some of the preconditions that he put on him willing to end his military action over there is something just the West is never going to agree to, such as having NATO go back to its 1997 geographical limits in terms of country membership. It's just not going to happen. So, we're going to see. It looks like this thing, the longer it drags out, the worse it is for the global economy. The more the likelihood is that you get some kind of a wild card event that could throw everybody's risk calculation off. So these are all definitely big problems here. From a purely technical standpoint, the market is deeply oversold, and you're seeing some positive divergences happening within the market. What I mean by that is this. We broke the lows that were placed in January during this most recent sell-off, but less stocks were hitting new lows, and it was on less volume. So that's a fairly positive divergence, but it's one thing to look at. It's one source of hope and optimism that we have, that we're going to put the lid on this thing. Otherwise, it's really going to depend on what happens, how quickly this thing gets resolved, how quickly you can get sort of back to normal, if there is such a thing, over in Europe. But that's where we're at right now. So Russia out of SWIFT, I think that's a big part of, it's an equal part anyway, I think, in terms of why we're seeing so much volatility this week. It's not just the bombs being dropped, it's also a $1.3 trillion economy essentially booted out of the global financial system, and everyone scrambling saying, how much counterparty risk do we have? And so that's what we're looking at right now. Anyway, kept you now again for about 6 minutes and 50 seconds. We're trying to be proactive and reach out to everyone and answer some of these questions one-on-one with you. But please, if you're seeing this, or even if you're not a client, you want to give us a call and talk about any of these issues, more than happy to discuss with you. Otherwise, everyone, peace and have a wonderful afternoon. Tomorrow's another day. Take care.